I always do a golf clap. I always clap for both sides. Bulls, bears, delta neutral, long gamma, short strangles, anyone. I always do a little clap like that whenever the quarter ends. We've put down our pencils for the quarter and we finished quad witching. So that was today. If there was any doubt about it, the options expiration for just about every ETF would have let you know that June 21st was the June quad witching date, and so we got a little drama back in the market. Saw a lot of posts like this, where it's like, hey, technically Nvidia should top, right? It just kind of makes sense. Nvidia bearish engulfing candle today on volume. This market is blank, so we'll probably be up another 10% by next week. Oh man, yeah, just throw technical analysis out the window. It's Nvidia. Not a lot of, there's a lot of posts like this. Nvidia is no longer the world's most valuable company just after a day. I wonder what this reminds me of. And it was when Cisco topped Microsoft March 24th of 2000. So this guy just compared Nvidia to Cisco in March of 2000. That it can happen, right? It can happen. This guy, he said his stepmom put 100 bands into Nvidia. I was like, oh crap. I've made some posts about Nvidia letting people know what it's going to do extremely accurately. I said, get all these losers out of the market. I don't give a F. Where are they going to be when Nvidia holds 108 and then triples from 115? Of course, it doesn't really matter. They have Discord and X checks from their little Twitter blues. But I was writing down, what was going to happen, and then we had this correction. By this point, my position in NVDY, that new fund risk that I had researched, just like QQQY, just like CONY, just like KLIP, that new fund research risk that I took really paid off for NVDY to the point by this post, NVDY had already paid for itself with dividends. Every dividend that I got after a certain amount of time, which was before this, was house money. It was pure profit on the house. And I still said, hey, I think Nvidia is going to go the length of wave 3, place at the wave 4 low. It worked out to just about above 1300 pre-split. I've talked about how I've been doing this since, before a lot of your, gurus were even, on Finch with the average life of a trader is less than 2 years. So I got to remind some of you guys, all eyes on tech this week, as Apple, Microsoft, Amazon, and Nvidia have each put in wave 2 lows and are set to stage a wave 3 rally higher. The time targets for the next 6 to 8 weeks, I believe all of those got hit and all of the invalidations held. This one, Nvidia traders need to decide who the top technical analyst is before the third quarter. Quad witching is near. Look at how accurate this could have been. Isn't this crazy? Quad witching is near. Nvidia bears won't be quirky enough to celebrate a midsummer festival until they give the best guru a flower crown. And now we look at the Nvidia chart. Oh yeah, pup, you're so zany or whatever. Look at the Nvidia chart and tell me this isn't the very first day of summer, the very last day of the second financial quarter, and we're look at this candle. Yeah, this is. I mean, really, if Nvidia tops on the very, first day of Nvidia tops on the very first day of summer, and I had just posted a video about how, astrology and the midsummer festivals and all this stuff was going to be forecasting that Nvidia, all this money is going to flow out of Nvidia. It is going to flow into a lot of other companies. She is the mother of the stock market. She is going to give birth as the sun has reached its highest point in the sky, and now it's going to transition into Virgo. That's going to be the last zodiac sign of the third quarter, and that might be when we see Nvidia pick up, a bid going into that October season, maybe a post-election rally if that's what Nvidia chooses to do. But anyway, just this idea. Hey, the third quarter, Nvidia is gonna top, and it might even be right when the third quarter starts. Like, you guys need to figure this out right now. So looking at Nvidia, it's an interesting chart from this low. Let's look at this RSI. 1, 2, wave 3 makes the highest high. We have a wave 4 correction, and now look at wave 5. It ends with momentum divergence. 1, 2, 3, 4, 5, and wave 5 was the length of wave 3 placed at the wave 4 low, which you can see on this monthly chart. So it's kind of all right there. And yes, this is technically an uptrend, but I'm the best wave theorist in the world. And look at this RSI. 1, 2, highest high, wave 3, wave 4, wave 5 has reached the length, exactly where it reaches the length of wave 3 placed at the wave 4 low. We see this candle, this huge wick on this monthly candle, possibly topping on the last day of the quarter. You couldn't have scripted it any better. I had a video about how Celsius and SoundHound topped right before the second quarter began, and how it looks like they're going to bottom right before the third quarter begins. I perfectly predicted the Apple quad witching rotation, and even a lot of the meme stocks I was posting heavily about before that quarter began. But anyway, we see Nvidia at wave 5 has reached the length of wave 3, placed at the wave 4 low. The RSI also gives a wave 5 ending with momentum divergence. So this could be a long-term wave 3 high. And if that was the top, and this is, it doesn't really matter if it's the top to technical anthem. You know, maybe it keeps making another marginal new high. Another marginal new high. I don't think it makes marginal new highs much longer than, 2 or 3 weeks into July. But I really think there's a good chance this is it. And I'll be honest, if I was running a firm right now and I had to, be giving, are we buy, sell, or neutral? We're definitely neutral to sell. We're not, shorting's a different story, but we're not giving the buy commons rec. We're definitely not doing that. At my firm, at minimum, we're neutral selling options, which I still do with NVDY. What could happen here, if this is the high at 140.76 and this is the low at 10.81, and this is the best bet, and why I'm still going to hold NVDY. Mostly, it's already paid for itself. It's paid for itself months ago. I think eventually this correction is going to be bought. But this even a 38.2%, I'll take off the 50% fib. Even a 38.2% and 23.6 correction, which would be a shallow wave 4, could take Nvidia down to here. So one day, this wave 3 high in blue is going to be put in. When that happens, it might have already happened today. What the shorts are going to do, they're going to put their stop loss at 140.76, and they're going to try to short this puppy. And they're going to say this bloated pig is going to have some money come out of it for an ABC correction. And so while I am holding a NVDY position that is paid for itself already in dividends, and I'm pretty confident that Nvidia is going to have money rotate out of it into other sectors that I'm going to be longing in those regards, collecting options on in those regards. A lot of people aren't. A lot of people have come out recently and said they're just buying Nvidia commons that have a 0% dividend yields. 100K in Nvidia commons, 0% dividend yields. My firm is going to give, if I was playing, some fake firm that doesn't exist, and we were giving buy, hold, and sell recommendations. My firm is saying 100K in Nvidia is dead money. It's dead money for a bit. Yeah, I think eventually it's going to get bought, but not until they get you out. So I think is 140.76 the top, with this being the last week of the second quarter, going into a third quarter correction. It might have 2 or 3 weeks left sideways, but I don't think that's the safe bet. I think that this is as clean as a 1, 2, 3, 4, 5 waves impulse is going to get. In my experience as a wave theorist, wave 5 reaching the length of wave 3, placed at the wave 4 low, there can be more haughty laughter. There can be more laughing like hyenas for a little bit, but not too many more weeks after that. I think it probably already happened if I had to guess, but I'd say if it didn't, Bulls got 2 or 3 more weeks to enjoy, these gains and what I believe are going to be unrealized gains and eventually dead money. So Nvidia profit taking is important. Without collecting option premium, it's probably dead money. Okay, Pup, so that means the stock market crashed, and the stock market's going to crash, right? Well, Nvidia is not the stock market, despite what people would want you to believe. There's actually been a lot of stocks that have been in sectors traditionally correlated with Nvidia that really have not played catch up at all. Apple was a very good example coming into this quarter, and I perfectly predicted the Apple quad-witching rotation into the second quarter. So when we look at the stock market topping, objectively, Apple is going to be the first thing that bulls point at and say, it can always happen. At any point, 1929 can begin. From a wave theory perspective, and if we want to be extra safe, throw on the trend seeker. I'm not going to actually do it because it'll mess up my other charts. Throw on the trend seeker. It's going to give a very good trailing stop. But Apple's going to say, all these Nvidia bears saying that, 140.76, that bearish engulfing is a market top signal. Apple's going to say no, it's a market rotation signal. And Apple suggests that we are still going to see tech rally until Apple is at least at 239. I'm here to say that Amazon supports that message too, a little further higher in the cycle. So unfortunately, I don't see any useful downside levels for Apple right now. Looking at this correction, uber short term, bulls might look at this ABC correction and say something like this is going on. But again, this is too small of a time frame. We're looking at 60-minute candles, and that's not really the scope of this video. But there is a chance this is an ABC correction that's ended. We've reached the qualifications for that. So yes, Apple is going to be giving a good amount of evidence from an Elliott wave theory perspective that it's going to rally until 239. It's hard, not impossible. It's hard to see the stock market topping during that time. And it's not just Apple from tech. Amazon, another one. I've completely kicked out of the park. AMZY, AMZP, two dividends a month from Amazon, besides the fact it's in YMAG and probably some of the other ETFs that I get dividends from. So let's look at AMZ, because I think Amazon, I call it AMZ, but Amazon, this is another one, even a daily count I've knocked out of the park. You guys are more interested in some of these short-term things. This is a wave 1, wave A. Realistically, it's a large wave 1. I've got it labeled as a wave A, wave 1, wave A for minimal target purposes. This is an ABC correction that ends at the 61.8% retracement, and then we got a very clean count from Amazon this week. This looks very pretty. So what bulls are going to say, this is wave 1, wave A, this is wave 2, wave B. In the big cycle, Amazon is incomplete until 199. Realistically, wave 3 is often the 161.8% extension of the length of wave 1, placed at the wave 2 low. That could take Amazon all the way up to 207. So we look right here, the 161.8% extension of wave 1 is 207. So that's going to be an incomplete target. 199 is also an incomplete target. But 207 looks like it's going to be more accurate, and I'll get to why. From this low, pretty clean count, even within this cycle for Amazon. It has this wave 1 and wave 2 correction, so we've actually got pretty clean levels even just within the cycle from this count. I believe that Amazon is going to hold 181.22. It's a little tight for the scope of this. Actually, I don't think that's a little tight. I think that's a really good level. 181.22. I don't think it's going to go. 188.35. in case we need a little wider, which I don't think we will. 173.87. So that would be 179. So 179 to 181.22. And so this is going to give the invalidation to the downside, the upside, just with even within the cycle from this low. The length of wave 1, this wave 1, places this wave 2 low, gives a target of 195 for wave 3. Before a shallow wave 4, and a wave 5 higher. So even these 5 waves, this is going to be the next kind of top for the market, I believe. This wave 3 target, 195, is the minimum target. The 161.8% extension is 197, very similar. Before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high, and wave 5 is the length of wave 1 placed at the wave 4 low, 202 is another target. So this wave 3, wave C for Amazon, I believe it's going to go to 202 to 207. Now, when that happens, bulls are going to look at this daily RSI, and they're going to see if 61.75 has been broken. My guess is it's going to be broken because it's already there right now. When that happens, that's going to confirm that this is a wave 1. This is a wave 2. And so when wave 3 ends, Amazon bulls are going to argue it's just the end of wave 3. This is why I'm holding AMZ in AMZP. Even though we're within a large wave 5, the subdivision of this wave 5 could take months to end. So when we go 1, 2, 3, 4, 5 waves up to 202 to 207 for this wave 3, bulls could see a wave 4 that retests the wave 1 high. And then wave 5 can be the length of wave 1 placed at the wave 4 low. That means Amazon can go all the way to 216. That's really more of when a toppy level is going to be in the stock market is kind of the sum of my Amazon analysis at this point. AMD, this is a very pretty one. Perfect call here, perfect call here, perfect call here. 1, 2, look at this RSI. Wave 3, highest high. And remember what we just talked about with Nvidia. 1, 2, 3, highest high on the weekly RSI. Shallow wave 4, wave 5 that ends with Momo. Keep that in your mind because 1, 2, wave 3, highest high on the RSI, weekly RSI, shallow wave 4, wave 5 that ends with Momo. Where can this money be flowing to? 1, 2, 3, 4, 5, wave 1, ABC wave 2, 1, 2, 3, highest high on the RSI within that cycle. Shallow wave 4, bulls are looking for a wave 5 higher. So AMD is going to be a pretty good example of what this is going to look like. Wave 1, wave 2, wave 3. I believe wave 4 ended. I don't think 138 and 141.16 will ever go. 141.16 is the proper invalidation. 138.46, not a bad level either. I believe that must have been this wave 1 high, but 132.83. So 138.46 is this 127.2% extension. 141.16 is this low. I don't think 141 is going to go. So it's going to be a useful invalidation. And I'll also tell you from this low, I think this is going to be a wave 1 and a wave 2. So I think it's going to get a little jumpy for AMD kind of early. Wave 1, wave 2, wave 3, wave 4. So I think AMD probably the biggest answer to the question, where would money from Nvidia flow to? It's already started flowing to Apple, in my opinion. And it was probably in the same group, in the same kind of groupings when the MMs bought all these stocks with Amazon. So I'm trying to give, when we look at the Mag 7, Nvidia, the closest to the top, probably. Amazon is a good example of how much Nvidia led, because Amazon can still go up to 216, 207 before we start seeing top signals. Now, Tesla, AMD, and Apple, they lagged Nvidia much more. I think Apple and AMD are in this next group where they've lagged Nvidia, and they've started getting money, and they're within cycles, but they're not nearly as mature as Nvidia's cycle is. Apple, the wave theorists are going to say, until that weekly trend seeker trailing stop goes, 239 is the minimum target. It's all noise until then. AMD sends a very similar message, and Apple has 2 covered call ETFs with FEPI and YMAG. It has 4 with QQQY. It has 5. AMD has 1, and then with FEPI it has 2. 1, 2, wave 3, highest high, shallow wave 4. AMD's, there's a good amount of evidence from a wave 3 perspective. Because this highest high is made, it's just the textbook 1, 2, 3, 4. At least another high is being made for wave 5. My expectation, it can go all the way up into, yes, the length of wave 3 placed at the wave 4 low. AMD could be up in the 270s one day. So that's another reason that rushing to buy puts on Nvidia is a little different than not owning commons, and it's a little different than owning shares of a position that sells out of the money covered calls that's already paid for itself. So hearing that Apple is going to 239, hearing that AMD is going possibly into the 270s, hearing that Amazon's probably not going to top until 207 to 216, a lot of statisticians, by that information alone, aren't going to go wake up and buy puts on Nvidia. If they're very cute, they're very cheeky, and they're very clever, they might do a pair trade where they short Nvidia and then they look for these to play catch up. I'm not sure my firm would be doing that. We'd have to see what my manager's margin was going to be for that. So anyway, Tesla, another great example of what this is really like. A lot of the ARK stocks, it's the biggest, the AI stocks. I talked about C3 AI recently. A lot of the ARK stocks, they're kind of the ones that are begging for money to flow from Nvidia, and they've got so many similar overlapping themes, and so many of them very similar rallies to Nvidia. And then they're like, hey, wait a minute, what happened to us? One by one, Amazon, AMD. Now we're seeing Apple, Microsoft, Facebook was probably the quickest one to follow Nvidia. They're saying we're going to follow eventually. Tesla's been very slow. I don't think it's going to stay slow for the third quarter. I think from this low, this is 1, 2, 3, 4, 5, wave 1, ABC wave 2, ended at the 100 to 127.2% extension of the length of wave A, placed at the wave B high. Now looking at this daily count, we can see that this is a wave 1 and ABC wave 2. I'm looking for 161.75 to not get broken. I own Tesla. I've collected tons of dividends from Tesla, and I took a lump sum position in Tesla and Tesla right around here. So that's been going pretty well, and also like right around here. So this was when I really, got into Tesla and Tesla, collected all these dividends during all this time. And so now we're so much further into the cycle. There's now an ETF that shorts Tesla. I've talked about and pays massive premium from doing it. I've talked about a short strangle on Tesla being possible through that ETF. And lo and behold, today we saw Tesla at the top of the short strangle screen. So I'm very much considering taking that position right now. I might not even wait for that. But since I own Tesla and Tesla, I think the optimal time for me to start adding CRSH to TSLY blended with Tesla is going to be when Tesla has a big thrust up into the 230s and then starts consolidating for a bit. Where's that number come from? This is wave 1, ABC wave 2, at the 50 to 61.8% retracement. The length of wave 1 placed at the wave 2 low gives a minimum wave 3 target of 266. The 161.8% extension is 235. If Tesla got into that range, I'd be heavily buying CRSH, the exact same amount, whatever the dollar amount is, with TSLY. That's what I'm going to do. And then I'm going to have that money for a short strangle bucket that's going to pay me premiums and income forever. So it's not foolproof. It's not a free lunch by any means, but the idea is that Tesla is so liquid, the implied volatility is so high, institutions have been able to run, and I've seen them run short strangles on stocks like this because they have the collateral and they have the margin to do it. I believe very similar to the new fund risk I took with QQQY and NVDY and CONY and KLIP. A lot of these funds where people were just like, I don't understand the option strategies, so they must be scams. I think CRSH blended with TSLY bought at strategic times, like when implied volatility is high, it's on the short strangle screen, or if I'm making a position that was biased to the bull side, delta neutral after a rally, I think it's going to be a very important position for me because it's going to be one almost like, in a crazy way of saying it, almost like bond holdings that I have, where I'm owning them because they're not relying on the market moving a certain direction. They're not relying on the super bull market for the premiums and the dividends, but in Tesla and CRSH's short strangle, delta neutral, a dream that I have. And right now it's just a dream. There wouldn't be a reliance on up or down movement. And in that sense, it's almost as safe as some of my bond holdings, some of my portfolio stabilizers. Anyway, enough on that. Tesla's a great candidate for who could be getting money from Nvidia, wave 1, wave 2, wave 3. Will it follow as a member of AI? Will it follow as a member of ARC? Will it follow as a member of semiconductor related devices? We'll see what the explanation is. My guess is they're not going to give us a very clear one until most of the move has already been done. Disney was requested. I think it's another good example of how blue chips, there's a lot of blue chips in the market. They're not all Nvidia, and a lot of them aren't sending blow off top signals at all. This is one with a pretty large yielding covered call ETF from YieldMax now. I think this is wave 1, wave 2, large wave 3, and a wave 4. This is a wave 5 that ended with momentum divergence and an ABC correction at the 61.8% retracement from this low. 1, 2, 3, 4, 5 waves up for Disney. This 95.05 level comes from taking the length of wave A, placed at the wave B high, being where wave C ends. I just posted about Disney, so I removed that picture. I removed those extensions from the monthly chart picture to post it, but that's where 95.05 comes. I think 95, that round number, pretty good too. I think Disney holds, and this is 1, 2, wave 3, highest high on the RSI, shallow wave 4 and a wave 5. We filled this gap. I think we're going to get a reversal. 5, 3, 5 is going to take Disney up to 144. That would be the minimum wave 3 target before a shallow wave 4 and a wave 5 higher. All in all, Disney could hold above 95 and go to 170. I think Disney blended with DISO would be a holding that I look at with pretty endearing eyes if I caught that. Let's look at Target. Target was requested. I think it's another blue chip, and it's also kind of similar to Disney, where a big reason that it stayed down is because of odd fundamental reasons that don't usually happen in the stock cycle. Kind of they were all making interesting business decisions that maybe they can turn around. I was even talking about how there was almost a whole group of stocks with this going on. There was like a woke sector. Bud Light, Disney, Target, they were all having similar setups. And then I even made a joke about how Snowflake was setting up with those stocks, and then Snowflake exploded and Disney and Target bottom. But anyway, that was a coincidence. This is a wave one and a wave two. This is another wave one and an ABC wave two at the 61.8% retracement, I believe, for Target. Target got into the top 20 options volume today. I hadn't seen it there for a long time. I've seen some strangle and straddle activity. Jay requested this. Blue Jay, not Jason. And I think it's a good one. This is 181. 180. This looks so much like Disney. I thought I already did this chart. 181.86. Yeah, tell me this doesn't look identical to Disney. They put all those those liberal stocks in a group together, and then they're going to have all of them bottom during Pride Month or after Pride Month, when a lot of them apparently fell because they were supporting that community too much and being boycott. Anyway, Target and Disney were recently being boycott for other reasons for the fact checkers. But this, I mean, I don't think I'm off to say that besides the initial rate hiking cycle, Target and Disney's corrections have largely been due to the political decisions that their companies have made. So, I do wonder if secretly Mr. Market made a woke sector and put Target and Bud Light and Disney together. It's quite interesting that Target and Disney are basically identical charts. And they might be bottoming and going into Q3 at the end of Pride Month, when one of the big things they were boycott for was being a little too pro that community. Anyway, no one on Bloomberg is going to tell you that, so it must not be true. This is an ABC correction. $133.21 is going to be the invalidation once I get these fibs right. Yeah, 133.08 is going to be the invalidation. And I'm looking for that to be 535. You want the time? I'll give you some voodoo. The time fibs. When are this going to be? I think that this is going to be timed pretty well. Beginning of the small degree wave one is the start. I connected with the small degree wave one high. That gives us a very interesting 8-period time fib right here, where I believe wave two is ended. And I think wave 3 on this daily cycle is going to continue until this 13 time fib. And look at that, right? 9, 12, 24, right at the end of the third quarter. So I think Target is going to rally throughout the third quarter. I think it's going to hold 133.08. And this is 535. The length of wave 1. Placed at what is going to be the wave 2 invalidation just above it. 214 to 215. I'm going to use as the wave 3 target. We'll call it 215. I think 133.08 holds. I'm looking for 215 to be reached for Target. Will it be reached by 9/12/24? It'll probably be a coincidence if it is. EQT. I had to get an oil stock in here. USO. Low IV rank, I think 0% IV rank with UCO, the leverage version of that oil ETF. Now there's an ETF, USOY, selling 0 DTE short dated puts on USO. So that, like CRSH, is not in the ETF total return calculator database yet. Very unfortunate, but I'm hoping it will be soon. USOY is something I'm quite interested in. I will probably calculate the total returns by hand and invest in it before the ex-dividend date. But I think that this is going to be a hot sector. And when someone made a joke on Stock Twits that Nvidia and oil were inversely correlated, I'll tell you what, the waves right now they don't seem to think that's quite a joke. I could definitely see oil rallying substantially. What's the AI thing? AI energy prices. If energy prices go up, oh, that's what it's gonna be. Energy prices are gonna go up. It's gonna make Nvidia's business too expensive to run everything because ChatGPT is too costly to power. That's why ChatGPT is gonna go up. AI C3 is gonna rip hard. Oil is gonna rip hard, and then Nvidia is gonna correct because they're gonna tell you that it's now too expensive to run all their stuff. Anyway, this is. And then we'll have to fund and subsidize it in the election, and that'll cure everything. Perfect. All right, so that's what your summer's going to look like. 32.07, I think is going to hold, and you can probably see where I'm going with this. 3, 4, 5 to develop, and we can see EQT in the 50s, in the 60s. It's going to rip. So. Will oil be inverse with Nvidia? I think I just spoiled the entire fundamental finance explanation for Q3. Sorry, guys. 75 could one day be hit. Could EQT be double its price? Oh, pup, you're crazy. I hope I'm crazy for that one. Litecoin. You know, this ticker has made a lot of people crazy. I think that this is one, though, looking for rotation as well, symbolic of a broader alt season. You know, I've talked about Coinbase a lot and Bitcoin. I want to focus on two altcoins in this video, Litecoin and Ethereum. 1, 2, wave 3, highest high on the RSI, shallow wave 4, and a wave 5 that ends with momentum divergence. We have an A, B, C correction. Notice with the extension, we're right at the 161.8% extension, and we're right between, I'll get this exact, 57.7743 and this high is 112.1370. Perfect. Yeah, so I'm looking for this low of 60.0979 to not get broken. It's a little wide, a little tighter is 63.41, but this is the more meaningful invalidation. I'm going to keep holding Litecoin. I've dollar cost averaged into it, and my average cost basis I'll share is 180, but I actually don't think I'm going to be holding that bag for too much longer. I sell lots of options on crypto related plays. I get huge dividends from Coinbase, MSTY, MicroStrategy, and now 2 dividends from Bitcoin itself from YBTC and YBIT. So I've been collecting massive premium while we've seen Litecoin stay down. I think this is going to be 1, 2, 3, 4, 5. Wave 1, wave A. Wave 2, wave B ends at the 61.8 to 78.6% fib. I'm looking for wave 3, wave C to begin. The wave 3 minimum target is 125. The 161.8% extension is 145. Then we could see a shallow wave 4 and a wave 5 higher. All in all, those 1, 2, 3, 4, 5 waves can take Litecoin up to 166. In the bigger picture, though, that's, in my opinion, the start of something new, something big, and it's going to be something that Gabriella and Troy are singing about on stage one day. Anyway, Ethereum. Oh, man. You guys are in your 40s. You guys don't even know what that means. Anyway, let's look at this. This is an A, B, C correction for Ethereum, and a wave 1 and a wave 2. YouTube tells me your ages, guys. I promise I'm not weird. This is another wave 1 and another wave 2 from this low. This is a large wave 3 in progress. So this is an ABC correction. Wave 1, wave 2, large wave 3 in progress. This large wave 3 for Ethereum is subdivided into 1, 2, 3. Highest high on the RSI, shallow wave 4 at the 38.2 to 50% fib. Very textbook. I'm looking for a wave 5 higher to be the length of wave 3 placed at the wave 4 low, because if it was the length of wave 1 placed at the wave 4 low, Ethereum wouldn't make a new high. So the length of wave 3 placed at the wave 4 low gives Ethereum a target of 5,401. I had the invalidation as 3,087, the 78.6% retracement of this wave 1, wave 2. That's also where the 61.8% extension is that target for wave 3, 4,667. But looking at Ethereum's daily chart, it's one that I think very similar to Litecoin is ending 1, 2, 3, 4, 5, wave 1, and ABC wave 2. I'm looking for a wave 3 to begin within a larger wave 3 during Q3.